guys, we got this great clip from one of our long content videos. Don't forget to hit the subscribe button. Enjoy. Assess cash flow. So we're going to analyze the cash flow generated by each property in the portfolio. And the things that we're going to consider in this are the factors like rental income, operating expense, maintenance costs, property management fees, and vacancy rates. So a positive cash flow is essential for a healthy rental portfolio, and any good property manager is going to know this number. You're going to be able to assess your cash flow and know where you sit at any certain point in time. And in fact, because we're doing this is what we do and this is how we do it and talking about why, we use this assessment of cash flow on a weekly basis. Like, we're pretty fanatical about this. Adon and Dave and Robbie, we have had a meeting every Monday for the last year and a half to talk about the property that Adon was managing, the Surfing Turtle. And we would talk about, hey, how's our cash flow? What does it look like? And Adon would say, for instance, we had really good bookings this month and we're going to bring in X amount of dollars. And then I would immediately follow up with the question, okay, great, what were our expenses? And then Dave would jump in and say, yeah, well, we brought in $25,000 this month and that's phenomenal, but our expenses were a little bit high because we had a toilet backup and we had to send out a plumber and we had a fuse blow and we had to send out an electrician. And we're analyzing this stuff like on the fly in real time, trying to figure out how we can get our positive cash flow to be more positive. So we're trying to identify where are the weaknesses, why do we have these expenses, and what can we do to cut down on that, and where can we drive revenues to go up higher. So this is just kind of looking behind the curtains of a real estate investor who's investing in these kind of projects and what we use these terms for and what we're looking for when we're doing it. So guys, I hope that I'm clear on this. It's after 7 o'clock. I sometimes fall apart when we're shooting these videos like this, and I may have on this one, but I think I got it. I think I nailed it for you. If you like that, leave me a comment. Let me know I'm doing okay. So number 3, guys, we're talking about how to evaluate our rental portfolio, and we're talking about doing it over a few different portfolios that we manage in real time and giving you a look behind the curtain. So number 3, when we're evaluating the performance of our rental portfolios, is evaluate the appreciation. Over time, I say all the time, if you watch our YouTube channel, I tell you that if you are a value-add real estate investor who buys for cash flow and holds on to real estate for a long period of time, you're going to hit a grand slam home run just about every damn time. And so we are constantly in real time looking at how much appreciation have we had on a piece of property inside of the portfolio. So let's say going back to the example that I used earlier in this, we've got a property that we invested $250,000 in. We bought it for 100, we renovated it for 100, we spent another 50 in holding costs before we got to cash flow positive. So we've got $250,000 stuck in it. And at the time that we did that, it had one valuation. Let's say it was worth $300,000 and we had $250,000 in it and we had some positive cash flow. And now what we're looking at for this evaluation of appreciation is what's it worth today? And we're going to assume that 5 years has gone by and the property has appreciated at 10% a year. Maybe that's too high, maybe that's pie in the sky stuff, but actually on the island of Puerto Rico, that's probably low. So what we're looking for with this calculation is, should we keep it and continue to make the cash flow, or has it appreciated so much that maybe it no longer makes sense for us to keep it in its current state? And it might be that we need to sell it to the next guy and let them invest new dollars and get a return on their dollars. Or we may want to take this asset and go to the bank and pull out some money so that we can unlock some of that capital. So this is stuff that we're thinking about. This is stuff that we're evaluating again and again. We do this like every single week of the year. And then towards the end of the year or the start of the year, we will look at the portfolio as a whole and we'll try and determine some kind of stuff that's not performing as well. And we'll usually sell some of the lower performing stuff. And we'll also be looking at some stuff that's performing really well, but it's appreciated so much that we either need to borrow money against it and pull out money so that we can buy the next thing, or we sell it. So that's how we determine whether or not we're going to keep something or sell something. Number 4, the fourth thing that we consider when we're thinking about should we keep it, should we sell it? We consider the market conditions. So what does that mean? We're going to evaluate in real time what is the current real estate market conditions in an area where our properties are located. So we're taking in factors such as, is there a demand for the properties that we have, or is there no demand? How about the supply? Are there a lot of things that look like what we've got on the market, or is there nothing that looks like what we've got on the market? We're looking at rental trends. We're looking at economic indicators. So that can influence a decision for us to whether or not we're going to keep something or we're going to sell something. So should we hold on to it or should we sell it? When we're thinking about market conditions, right now in Florida, we have a rental portfolio that has had recent massive increase in the valuation. And I'm talking about, we've owned several things inside of the portfolio for coming up on 15 years. And so from the price that we bought them at to the price that they're worth today, we're talking about like a 10x. So the thought is, are we making enough money on those rentals that we should continue to hold on to these properties, or should we sell? Hey guys, thanks for watching that. Subscribe to our channel, watch this next, and then also check out the pinned content for more great content, guys. God bless.